All right. Hey, listen, we've had a heck of a day. NVIDIA announced earnings last night. The market's gapped up. The S&P's gapped up. Oh, it's up about 123 points now. So we have a lot of action going on right now. And when you have action, you have opportunities. So please give me your charts, and I would be happy to take a look at anything and just comment on it. Oh, we've got our first one in. SUPN. Hold on here. Okay. Yeah, huge gap down. This is a daily chart. So, yeah, usually with a pharmaceutical, and I'm not familiar with this company, Supernus, but usually with the gap down with a pharmaceutical, it's because some drug or another didn't kind of meet expectations. And depending on the pipeline of this company, if that's a major part of the revenue, then this would make a really good short. A lot of the time, when you see a huge gap down like this, percentage-wise, this is over a 10% gap lower. You're going to see a rebound, and I would consider shorting any rebound on this. But I think it might have a little upside after this big down blast here. And David, I know you hate doing this, but when I'm looking at my chart and when I entering
Oh, okay.
stuff on the
Yeah, no
chart, the
problem.
chat goes away,
Um,
so I
M
can't see it.
MS. Carl asks for MS.
Morgan Stanley. Yeah, looks good to me. I mean, this is a pretty well-defined uptrend, and I just want to just take a really quick minute to talk about technical analysis because that's kind of what we're doing here. Is There is a lot of complex ways to analyze a chart. There's a lot of people that are into Fibonacci. There's a lot of lines you can get on a chart. What I found to work, and I've been trading actively every day for over 30 years now, what I found to work best is the simplest chart analysis. So, like when I draw a straight line under here and you say, well, Peter, that's so simplistic. Can't we do a 20-day moving average and see when it crosses over the 18-day moving average or whatever? It's just amazing how well simple technical analysis works. And there's an explanation for that. The reason it works so well is because the market is a voting machine in the short term, and the easiest trends and the easiest patterns to spot are the patterns that everybody tends to adhere to and trade on. So if an obvious support level is broken, everybody can see that, and it tends to be self-reinforcing. So that's my little philosophy on technical analysis. If you're here to get, 20 different lines on a chart that are all different colors and you're trying to figure out which one is the one that actually determines, you're probably in the wrong place. So what I like about simple is it's also pretty easy and it's pretty effective for making money. So with that little bit on technical analysis, let's take a look at our next chart.
All right. Mike asks for WRBY.
This looks like a fabulous short. It'd be nice to know the fundamentals behind this and why it's doing this. And the place to short classically in a situation like this is as soon as this gap is filled. So it's just amazing um, how many times, just kind of really classical resistance and support lines work. And we see this rebound here, but there's something that caused this huge downtrend. There's some piece of news that caused this particular gap down. As soon as this recovers a little bit, I would think it would roll over and keep on going. And just I do use some technical indicators. This one right below it here is the MACD that kind of just tends to let you know on balance volume, whether it's going up or going down. It's kind of a good indicator. And I sort of use the crossovers and also the peaks on the histogram. And then this bottom one is on balance volume just to see, how many people are buying and how many people are selling. This looks like a good short. What else do we have, David?
All right. Next one is ELMD.
B as in boy for the last
Uh,
one.
Echo. Oh, yeah.
Okay, great.
Echo Lambda
Elmi
Lake Delta.
Communities REITs.
ELMD. Oh, no, ELMD. Sorry.
Oh, ELMD.
Yeah.
Okay. Electromed. All right. So what this looks like to me, it'd be interesting to see a longer term chart, but what this looks like to me is a really well-defined base. Um, pretty obvious here just in looking at it. But at some point here, and I don't think this is a breakout yet, but at some point here, what I refer to when a stock's been going up, and when you see a gap like this and then it bases for a long time, uh, what I like to say is the stock is building a launching pad. And it really is. If there's whatever made the stock go up in the first place, traders are looking at it, investors are looking at it, and they're trying to figure out what the next catalyst is. When that next catalyst comes, you'll often see a huge breakout. And typically in technical analysis, you'll see a break that's at least as big as the range. Here, that's not that big of a deal. That's about $2. But just based on what I'm seeing in the chart here, I think it could go higher. And if you want to play this and not watch it all the time, you can pick a spot. You can pick, say, this high or some other spot on the chart, and you can also couple it with volume where you have an automatic buy order. So when it gets above a certain point, you're automatically in, and you could have been at work, driving your car, not watching the market, whatever. But these basing patterns where you anticipate a bullish breakout are a great place to use automatic orders. And then you can also, at least with the Thinkorswim platform, which is what we're on right now, that's a broker that's now under the auspices of Schwab. You can also set automatic orders to set a trailing stop the minute you buy it. And this can happen all automatically without you having to do a darn thing. So you catch the breakout going higher, and then as soon as it reverses by either a percentage or a dollar amount, you're out of the trade. It's kind of a really nice automatic way to trade. But this looks like good potential here, good potential for a breakout. David, what else do we have?
Right. Next is BTU.
I love this ticker symbol because it's obviously a play on British thermal units, and this is Peabody Energy. Um, this is kind of an interesting chart right here, and you might say, well, it's going down a little bit, so I think that's bearish. Not necessarily. So what we have is a big uptrend here, and then we have a peak and a downtrend. This actually reminds me a little bit of the chart on gold, and what this really is more of a sideways wedge pattern. Sideways wedge patterns are compression patterns. So you look at this chart here and it's like a big spring and it's being compressed down to a point. When it gets compressed enough, you see a breakout. And the breakout can either be up or down, but the most of the time, the highest percentage trade on this is it'll break in whatever direction it was going before. As you can see, Peabody Energy has been climbing, 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 a pretty darn bullish chart, and then you have this compression. So if I was to bet on this thing, I would bet that you're going to see a breakout to the upside. And once again, you can put your breakout anywhere in here. You can, if you're really conservative, you can put it this old high here, which isn't that much higher. But when this does break out, I suspect it's really going to run. This is a really nice compression pattern. This is a nice pattern to trade. David, what else do we have?
Right. Next is IBIT.
I'm sorry, what was that?
IBIT. Yeah.
The iShares Bitcoin. Okay, so Bitcoin is an interesting trade because it's obviously in a downtrend right now. And but I don't think it's going to stay in a downtrend, and here's why. Every single stock we trade, Bitcoin, gold, oil, commodities, whatever it is, uranium, whatever your favorite thing to trade right now, it's all denominated in dollars. And I think we're going to see a continuing devaluation of the dollar. So even though Bitcoin is going down right now, and I would say, if I had to make a short-term bet on Bitcoin, I'd say, it's going to go lower in the very short term. But I think the best question to ask on Bitcoin is not how high Bitcoin can go, but how low the dollar can go. Because Bitcoin fundamentally is a trade to get value out of the dollar and into something else. And Bitcoin, for whatever reason, has a tremendous following. It's not isn't backed by any assets, so I'm a little bit wary of it. I like to see things with, actual value, warehouses, trucks, factories, whatever. Bitcoin doesn't have that, but Bitcoin has been one of the greatest refuges out of the dollar we've seen in the last, essentially since it was created. So in the short term, Bitcoin lower. In the long term, Bitcoin higher. What else do we have,
Okay.
David?
Well, since you were just talking about the dollar, one of the next questions was UUP.
UUP. The US dollar index, bullish ETF. Yeah. So look at this. The dollar's been going higher. And I don't know if this is I'm not familiar with this particular ETF because I haven't traded it. I don't know if it's leveraged. It doesn't look like it is. So this is the dollar, and it looks like it's going higher. And all I can say about the dollar is long term, it's one of the greatest shorts ever. If I was to trade this chart right now, I'd say short term higher. It sure looks that way. We've got a pretty well-defined overhead resistance line. Maybe it gets somewhere up here. I think it's got some more upside. If you want to take a really short-term trade, you could to the upside. I'd definitely get out when it hits resistance. But I would say just fundamentally long term, the dollar has nowhere to go but down for a bunch of reasons. I mean, that's a whole live webinar in itself. But what we do know is that the federal government has more debts than it can ever pay. It's only got a few options for taking care of those debts. One of them is raising taxes, very politically unpopular. The other is cutting spending, also very politically unpopular. I don't think either one of those two are viable. I think the only thing they can do about the debts is inflate their way out of it. So inflation is by definition making the dollar less valuable. So fundamentally, I think the dollar has nowhere to go to but down. Interesting that this chart is trending up, at least in the short term. What else do we have?
All right. How about TLT?
Oh, yes, the 20-year bond. Yes, sir. Even though this is down right now, the general trend is to the upside. So the longer term trend is higher, depending on where you want to draw this line. We haven't actually even hit support yet. So we could be setting up for a bullish trade. I think that there's not a lot of movement here. So from hitting support here up to resistance is, gosh, it's just we don't have a heck of a lot of movement here. Somewhere in here, we're, like 88 to 92, 93. I think if you're trying to make money on this thing, you do something leveraged. You buy an option on it, or if you're into futures, a future. Not a huge movement, but there is well-defined movement, and that's kind of all you need to make money. Um, all right, David, what else do we
All
have?
right. And GLD.
Oh gosh, gold, one of my favorites. So this is one that we've been trading lately. And so this is, as you can see, so there's this gold is so darn interesting. So there's this long basing pattern right here. And then we have this big run higher. And then you have a peak and a big sell-off. And then you have, like I said, with that other stock that we looked at, we have this kind of well-defined sideways triangle. So let's say we get rid of this line so it's not so confusing. And if you were a betting person, which direction would you say this is going to break out? Now we have a lot of compression here, right? So the pattern is getting tighter and tighter and tighter. Which direction do you think gold's going to break out? Even if you didn't even know what this is, even if you didn't know what the underline is and you're just looking at the pattern. So we have this huge upswing from August and percentage wise pretty substantial, and then it goes into a compression pattern. So what I can tell you is almost in every case when you see this kind of a sideways compression pattern, the stock or the underlying resolves itself in the direction that it was going before the pattern started. What I'm anticipating on gold is a huge breakout. We've actually got a live event this Saturday that's completely free. And I'm going to try and post the link to it before we're done here. But I'd love for you to come. And it's all about gold and the best way to play it. So there's a lot of ways to play gold. There's a ton of them, as a matter of fact. And some of them really outperform others. This way to play gold is a little unique because you get income along the way. Plus, you get this huge pot of gold at the end of the rainbow if the underline performs. And like I say, gold is really a bet on the devaluation of the dollar. And I think that's just absolutely a given. I don't think there's too many things you can depend on in the financial markets, but I think the devaluation of the dollar is one of them. I just don't see any other possibility. I also think, there's been some speculation lately that the Fed is not going to cut rates in December. They've had some hawkish talk recently, and that's had an effect on the markets. It's had an effect on gold. I think they'll probably cut. The unemployment report came out this morning, and even though the jobs number was way higher than anyone expected, the unemployment rate is the highest it's been in years, in a long time. So we have some softening in the economy that I think the Fed is definitely going to address. And so I think we'll probably actually, in spite of what they've said, I think we'll still see a rate cut in December. That'll simultaneously boost the market and it'll continue to devalue the dollar. So, David, what else do we have?
All right, we had a question.
Sure.
Um, is there any significant risk of federal debt default? And would this cause a state and municipal default? How much worse could this situation be in comparison with the global financial crisis of 2008, 2009?
Well, that's a great question. And, I get emails just like all you guys with a ton of emails that are financially based because that's what I'm into. And so I get a lot of emails along those lines, like, is the US government going to default? And here's what I would say is the US government will never default as long as they have a printing press. And so it doesn't matter how big their debt is. They can push a button and produce that amount of money to pay that debt. So I don't think that a default is when you just tell your creditors, guess what? I can't pay you. You tell your landlord, I'm not paying the rent this month. I don't have it. The US government will always have it because they've not only got the printing press, but they've still got the world's reserve currency. So the dollar, they've got a lot of clout in that way. Here's the problem, and this is what you're going to run into. People say the same thing about Social Security. Like, when I get to Social Security, when I get to that age, is Social Security still going to be there? And my answer always is the same. Yes, you're going to get your Social Security. What your Social Security is able to buy is a different story. Maybe it buys you a bag of bird seed so you can sit on a park bench and feed the birds. I don't know. What I do know is when I was a very little kid sitting with my mom at the counter at Woolworths. I mean, this is before I even went to kindergarten. I think I was 4 years old, 5 years old, but I remember this. An old man came behind the counter to get a cup of coffee, and there was a little sign by the coffee that said 10 cents. And I remember this because the man flew into a rage and he was so angry and he was shouting to anybody that would listen, coffee is 5 cents. Coffee is 5 cents. Coffee isn't 10 cents. What the hell are you people trying to do? And I think my last cup of coffee that I bought was somewhere around $5. 5 cents to $5, that's like 100 times increase. So inflation is real. The devaluation of the dollar is real. I think in terms of your own financial planning, I think your only question should be is in that context, in a concerted effort to make the dollar worth nothing, what is your strategy? And like I say, that's what we're going to talk about this Saturday. I think it's not what's really important emotionally is to take it out of whether it's good or bad. Don't say whether it's good or bad. The only question you should be asking is what should I do about it? It's like playing the game of Monopoly and you pick a card that says the US is devaluing the dollar as fast as they can. It's like, what do you do? It doesn't mean that you have to build a bomb shelter. It doesn't mean that you have to head for the hills. There are ways to actually even prosper in that situation. So, great question. I'm glad you asked it. And do we have any other charts, David?
All right, yeah, next is CTSH.
CTSH. Cognizant technology, cognizant. Yeah, interesting. When you have a big downtrend like this, and then the downtrend is broken by and I'm just going to draw some lines. You can easily see this, but just to make it easy, and the downtrend is broken by a gap up, this is usually caused by something fundamental. Because we've just gone through earnings season, I would guess that it was an earnings announcement, but I would say this is actually a decent long. This downtrend has been broken. It's going to the upside now. It's a gap. It's kind of gone down. It's partially filled that gap. And now it's heading higher. And we actually have a pretty darn positive candle on it today. I'd say this is a decent long. Um, I'd consider that trading this to the upside. It's got some upside. I'd take a look at a longer term chart and see where your possible points of resistance might be. But I'd definitely for trading, I'd definitely consider taking a long on this company, either buying the stock or doing it with an option. What else do we have?
Right. XOM.
Oh, that sounds oily to me. Exxon Mobil, pretty well-defined uptrend. So, oil is very interesting because it's got its own supply and demand, um, influences. But oil is also it's another commodity where it's kind of a proxy on the dollar. So as the dollar loses value, oil tends to go higher. This, what I've just drawn here is an uptrending wedge. Uptrending wedges kind of make people nervous because it's actually a bearish pattern. I don't know. In the case, I think Trump is really bullish on oil and gas, and so he's made it much easier to drill, explore. They're doing leases now. So Trump is actually doing everything in his power to bring more supply on the market. And a lot of people see that as bearish for the price of oil. And that is actually true. But at the same time, he's not curtailing the uses of oil. So he's not trying to mandate that people don't use it anymore. So you're going to see supply go up, and you're probably also going to see demand go up. But as far as this particular chart, it's pretty bullish. But what I would say is this resistance up here is real. We saw it right here. And I would say there isn't a trade here to the upside yet. If this thing hits resistance, goes down to support, I'd say anywhere along this uptrend line, uptrend support line is a good entry point. I think overall bullish, but I wouldn't enter a bullish position quite yet. I'd wait for a better setup. What else do we have, David?
Um, okay, another question from more of a overall economic question. Federal interest payments have overtaken military spending in 2025. What happens when the interest spending encompasses the entire federal spending and there's zero money remaining for uh, military and other things?
Yeah, well, that's a super relevant question. That's a good question. So, what's actually going on there is the plus $1 trillion is actually the service on our debt, the service on our debt. So, if here's the thing, the Fed raised interest rates, a little while back, and it kind of killed the real estate market, right? Because it's so interest rate dependent. Nobody's got $1 million laying around to buy a home, but if you can afford the payment, maybe you can get into that $1 million house. Okay. So the ones most affected by interest rates are the debtors, because that really affects what they have to pay. Who is the biggest debtor in the history of the world by far? I mean, there isn't even anybody in second place. I mean, the biggest debtor in the world by far is the US government. So that $1 trillion that you're seeing, that $1 trillion of service that has to be paid, is 100% dependent on interest rates. So if you cut the interest that the federal government had to pay in half, you would also cut that servicing of the debt in half. So as you can see, it's the Fed not just trying to boost the economy a little bit, but also, it's almost like a charade because the government has no choice but to cut the interest rate. I think the real and what you're really asking about is when does the death spiral happen? When does the end game happen? And I think the end game happens when the Fed completely loses control over interest rates. When the market says, look, you want to sell me a treasury? I'm, I'm only going to accept this really, really high interest rate. I'm not going to go for what you want me to pay. And to watch that, you really watch the auctions, the treasury auctions, and you see how either undersubscribed or oversubscribed they are. And that'll kind of tell you what's coming. Yeah, for the short term, once again, the government has the printing press. But I think we're actually, what's funny about this is back in the 1970s when I was sitting around the dinner table with my folks and there was dinner conversation, people worried about this exact same subject. That was like 50 years ago. And so people rightfully go, look, man, I've been hearing about this warning forever and nothing bad's ever happened. So what's your problem? Or you just a chicken little or what? And what's happening now is the acceleration. So this gentleman that just asked this question, when the service on the debt exceeds the biggest military budget the world has ever seen, yeah, we are accelerating. That's why I'm doing this, this gold webinar, this free gold webinar this weekend. It's one of the best ways to kind of protect yourself. Do we have time for one
All right.
more?
Yeah, I think we can do one more. SNDK.
SNDK.
Yeah, SanDisk. Yeah.
SanDisk. Yeah. 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 Great looking chart. I'd be I'd be a little scared to I mean obviously it's a bullish chart. It's great. We have some acceleration right at this point right here. You could argue that this new accelerated uptrend has been broken. This is a bullish stock. I don't think I'd take a bullish position until it descends a little bit more and we see if this uptrend support line holds. Looks like a good play that got overextended like so many. But you look down here at the MACD, the histogram's going down. We've had a crossover. It looks like on balance volume starting to turn over. I definitely wouldn't take a bullish position till it retraces a little bit more and starts to bounce. And I think that's my time. And let me, if I can, um, post. This is a long URL, but that's the registration URL for our free event this Saturday. It's at 9 o'clock in the morning Pacific, which is noon Eastern time. I hope you can make it. I'm going to try and make it as ram-packed with great information as I can. I really respect your time. My big objection is going to webinars and there not being anything of value. So I'm going to try and give you something really good. And I really thank you for being here. It's just really fun to do these events with David. So thank you so much, David, for having me.